Hey everyone, thank you so much for being here today, for joining us on this webinar. My name is Ronald Pinto. I'm principal analyst for natural gas and LNG at Kpler. I focus on the analysis and modeling of the European gas market. I have my colleague Charles Costarus join me here also, he is a senior market analyst and also covers the development of the European gas market. So we're here today to talk to you about what's been happening since Russian flows via Ukraine came to a halt on January 1st. Basically, this is a topic that we have covered extensively in the last few months. We published a couple of blog post. The first one where we addressed the potential impact that such an event would have on countries in the region, in the CEE region. Then we published another blog in September where we analyzed and highlighted the options on the table in terms of supply diversification for countries in the region. And then, since then, we've been publishing also news and research updates on the topic. So today we are going to present the webinar Adapting to Change, Exploring Europe's Gas Market Resilience Post-Ukraine Transit Halt. And basically the structure of the presentation is the following. We'll start by giving you some context into overall development of Russian pipeline gas supply into the European Union in the last 3 years. Then we'll take a look at specific development in terms of supply and demand in the CEE region. Then we'll move to explain more of what's been happening more in detail in terms of flow dynamics in the countries in the CEE region. And and to finalize the presentation, we'll be basically addressing what could be happening or what could we expect in 2025 in terms of incoming supply from both LNG and pipeline, and also the events that could be unfolding in this year. So you have a Q&A box at the bottom. Please, if you have any questions, which we hope you do, we can address them towards the end. With that, I will give the floor to my colleague Charles, who will talk to you about some context information.
Thank you, Ron, and hello everyone. Thanks for being here with us for this webinar. So let's jump right in. So we're going to start by having a very brief look at kind of what's happened in the last few months leading up to 2025. So first, looking at a quick timeline of the TTF prices from the start of 2024 up until yesterday, and some of the events that fueled some of the larger price swings we saw in the second half of last year. So we indeed saw that as the year kind of closed, December prices were reaching just under the $15 per MMBTU mark, which was the highest level we've seen since November 23, as the possibility of a no deal kind of became increasingly likely. And sure enough, that $15 mark was surpassed in the first few days of January, as we can see on the graph here on the top right. However, despite the kind of slight uptick we've seen in the past few days due to some worries on more recent disruptions on the pipeline side and some sanctions as well, relatively quickly it seems that these fears that were mounting up since kind of late December have dampened a little bit since alternative pipeline supply still continues. LNG flows remain plentiful and storage levels in the EU still remain relatively strong despite some sharper withdrawal rates compared to previous years. So here on this slide, we're looking at just a map of the 5 main pipelines of Russian gas that come into the EU, which used to bring a combined 127 BCM of gas in 2021. And since the start of the war, 3 of these closed, and the most recent one, the Brotherhood pipeline, closed in Jan 25, as Kpler Insight anticipated, and that was the last pipeline of Russian gas transiting through Ukraine. And so now we're effectively left with the 16 BCM capacity Turk Stream pipeline, And we expect Russia to effectively maximize the utilization of this pipeline, and we expect throughputs to ramp up. On the left-hand side, we see here kind of the direct effects of these pipeline closures on the supply side. And that was indeed one of the main factors in the market drop in EU gas supply since 2021, which was also caused, of course, by falling domestic production in the EU. And on the demand side, we did see some demand destruction, of course, with very high TTF prices, especially in 2022 and 23, which caused European gas consumption to plummet by about 20% in 3 years, and stabilizing at around 313 BCM as of last year. So if we look a bit more into detail at the EU imports of natural gas, so here we're looking at EU27 nat gas imports split by source for the last 4 years, and how much that source represents in that year's import mix, with total EU imports at the top. So in the last 4 years, we really see a quite noticeable shift away from pipelines and more towards LNG. So in 2021, 24% of total EU natural gas imports came from LNG. 3 years later, that shifted to 42%. And for pipelines, this was to 76% of the total mix in 2021, and that decreased to just 58% in 2024. And this was mainly due to the stark drop in Russian piped gas, which was then supplemented by more flexible but more expensive LNG. And especially so US LNG, which is really the main message on this slide, which is now supplying about 18% of total EU gas needs as of last year, compared to just 6% in 2021. And if we look at kind of other pipeline supplies into Europe, they have relatively little room to increase flows due to either bottlenecks or domestic consumption needs in those countries. There is also an interesting note on this slide here, which is the slight increase of Russian pipeline gas imports in 2024, so moving from 7 to 11% of the EU gas mix. And this was due to some of the market players in Europe that were forced to seek alternative suppliers, which included Russian supply via Ukraine, in part due to the German gas storage levy. But this all makes it quite a challenging environment for countries in Central and Eastern Europe who are quite reliant on Russian gas. And I'll now let Ronald take it away and dive in more on this topic.
Thank you, Charles. Now we're going to be talking about what's been happening in the CE region in the last 3 years, especially addressing the events since the beginning of the energy crisis. And here we're showing you a map that compares selected flows into the region, comparing like first half of 2021 and first half of 2024. And one thing that we can say in terms of like pipeline gas supply is that diversification set the pace for the region. This diversification took different forms. Like the first one was in terms of infrastructure additions. We had like very key additions, for example, like the Balkan Stream that allowed for like flows to go from Bulgaria into Serbia and Hungary. Let's remember that this pipeline basically it's the extension of the Turk Stream pipeline. So like this allowed for like higher Turk Stream flows into the CEE region. We also had like the development of the Greece-Bulgaria interconnector that basically allowed for flows coming from the TAP pipelines to go into Southeastern Europe in 2022. More recently, at this interconnection point, Komotini, we also had like the beginning of flows directly from the Greek gas grid. So basically that was very timely because it happened just in anticipation of the commissioning of the Alexandroupolis LNG terminal in Greece. So like this will allow for also Greek LNG to flow into the CEE region. In 2022, we also had the addition of the pipeline of the Baltic pipe into Poland that basically has been flowing around 7 BCM into the country. And this happened in the aftermath of the loss of the Yamal supply into Poland. And we also had the interconnection between Hungary and Slovakia that since 2021 has been increasing capacity as part of a pilot project. So in that sense, like all these events have like increased the flexibility in terms of like where gas can flow from and to. Another aspect of this flexibility has been given by the interconnections, basically by the start of bidirectional flows, for example, between Italy and Austria. Let's remember that previously flows could only go from Austria to Italy. Now this allows for, in the future, and it happened actually in 2024 too, like flows from Italy to Austria too. The same happened also. It's not the most relevant information, but like even for flows to go from France to Germany, that also happened during this time period. We also observed the optimization of capacity allocation where it was needed the most. This was particularly true in the case of interruptible capacity. So that also helped gas to be sent where it was needed. And lastly, in this sense, in terms of like events that really shaped the flows in the region, was the implementation of the German cross-border storage levy that impacted negatively flows from Germany into the Czech Republic and Austria. And this happened as this levy increased in value from 2022 onwards. Let's remember that the levy was suspended on January 1st, so it coincided with the cease of Russian flows via Ukraine. Also in 2024, what we can say is that flows of Russian gas via Ukraine, which is like the main topic we'll be addressing today, flew directly or indirectly into Slovakia, Austria, Slovenia, Czechia, Poland, and Italy. And that what we have observed is that also flows that are part of the contract between Gazprom and Hungary were redirected from the axis Slovakia, Austria, Hungary to the axis that takes flows from the Turk Stream pipeline and send it upwards into the CEE region. Next slide, please.
So here we're looking at a map showing the terminal utilization agreements and the sales and purchase agreements that were signed by non-domestic CEE players at various LNG terminals with the start dates, duration, and capacity. And so indeed, we have noticed since 2022 an increasing amount of players, notably from countries like the Czech Republic, Bulgaria, Austria, Latvia, Slovakia, signing various agreements from anywhere between 3 to 10 years long in some LNG terminals in these other countries. And we do see that the utilization rates in some of these LNG terminals, especially in the Netherlands, in Lithuania, and particularly in Greece as well, the utilization rates are quite low, and so they're not being fully utilized. So there is some room to increase throughputs to serve the gas needs of these players that we see on the screen. And of course, the CEE players in Poland or Croatia, for example, obviously they have their own capacity booked in their national terminals, but they also have the option to potentially buy some gas via those terminals and then sell it on to some other non-domestic players. So this kind of has all inevitably caused a slight reconfiguration of the gas flow dynamics in some of the countries that we mentioned. So beginning on the pipeline side, so we lost supply from the Nord Stream and Yamal pipelines, and this was kind of compensated with the addition of the Baltic pipe in 2022, which we can see on the left-hand side, which now provides about 7 BCM of gas per year. We also noticed increased flows from the Turk Stream pipeline, and both of these have really kind of helped to add some more gas into countries like Poland, especially for the Baltic pipe, and for countries like Bulgaria, Hungary, and Serbia for the Turk Stream pipeline. Looking at the LNG side on the right-hand side, we're looking here at the US volumes to the EU with a specific focus on the CEE countries. And we can see that indeed they have increased imports from the US since 2021, with a slight drop last year due to some of the demand destruction in Europe in general that we mentioned a bit earlier. And in fact, all of these countries, except for Italy, the US LNG represents quite a large part of the LNG mix, at least 50 to 60% for some of them. And for countries like Greece and Germany, it goes as high as 71% in Greece and even 90% in Germany. And the trend is that for some of these countries, this reliance on US LNG is increasing year on year, and we could continue to see this trend going forwards. Pass back to Ron.
Yeah, another way in which the region kind of like adapted to the energy crisis was, of course, in terms of gas demand. We observed since 2021 a significant amount of demand destruction, especially that took place between 2022 and 2023, mostly caused by the increase in TTF prices and in gas hub prices across the region. We have seen like this trend in the last couple of years to stabilized, especially in countries like, say, like Hungary, the Czech Republic, Austria. One of the drivers that has been taking place and that is behind this like loss of demand has been the power sector. On the one side, because we have seen overall decline in power demand in most of these countries, like also we've seen the increase in power generation from solar sources in most of the countries, like with the exception perhaps of Slovakia. So on the right, you can see that in the countries where we have observed this increase in power generation from solar sources, we have seen basically a decline also of gas-fired power generation. That, of course, was also like the result of this decrease on overall power demand, as I mentioned before. Next slide, please. Now, in terms of the emerging flow patterns that we have observed since January 1st in the region, this slide basically summarizes the main trends. We're gonna go over each of these points in the next few slides, but like I just wanted to say that yeah, of course, what we have seen is that drop that flows from Ukraine to Slovakia dropped to zero, and consequently, this had an impact on flows from Slovakia to the Czech Republic and Austria. So these flows also ceased on January 1st. Very interestingly, we have observed that flows from Germany to the Czech Republic and Austria have increased significantly, and this is because of what we just mentioned a few slides ago, that the cross-border storage levy came to an end on January 1st. So like this was behind this increase in volumes. We have also observed that flows into Slovenia that use the TAG pipeline continue. We are thinking that like these flows are coming likely from the use of underground gas storage facilities in Austria, but also potentially using gas being imported from Germany. Flows from Italy into Austria have remained extremely low, and on the other direction, almost negligible. So like we're not seeing this access being fully used so far. In terms of like the southern corridor, like in the southeast, what we can see is that flows from Turkey, both from the Turk Stream and from the Turkish network, have remained stable overall. Romanian exports to Moldova have increased, as you know, as a result of the termination of like flows between Gazprom and Moldova that also happened on January 1st, and that Hungarian exports to both Slovakia and Ukraine have also decreased since January 1st. And now we're gonna dive into this dynamics more in detail. Yeah, next slide. So the first slide here, we're showing flows in and out Slovakia. And as you can see in light blue, flows from Ukraine dropped to zero, as I just mentioned. So, and that caused that basically exports to Austria and the Czech Republic also dropped to zero. We can see that imports into Slovakia from Hungary, as it was mentioned, also decreased slightly. We continue, please. Forgot to mention, like, in order to like better understand what's going on, we are highlighting on the map on the right in red, like the region where these flows are taking place, like for you to have like a better comprehension of the dynamics. So now we're taking a look at gas flows from Germany into other countries, in this case to the Czech Republic and Austria. And as you can see, it is evident that once flows from Ukraine via Slovakia ceased and the storage levy came to an end. So we saw like a significant increase of flows into the Czech Republic that have been like quite stable since January 1st. Like flows into Austria have been a bit lower compared to those going to the Czech Republic. However, they remain significantly higher than what they were like in the last few weeks of December 2024. Next. Staying in Austria, it's important to mention here that basically flows that go into Austria from Italy have remained quite small. So like it means that this access is not being fully utilized, and we can confirm that basically flows that enter the TAG pipeline at the Baumgarten interconnection point are down to zero. So it means that like, yeah, flows that back in the days used to transit Austria and go to Slovenia and Italy, coming from Slovakia, are down to zero too. Next slide. In terms of like flows that go out of Austria, interestingly enough, as it was highlighted before, we see the continuation of flows into Slovenia. So it means that this is basically being filled using potentially storage facilities in Austria, or by increasing imports of German supply through the Oberkappel interconnection point. We can see that flows into Italy are dropped to zero. Now, when it comes to Romania, Romania has been sending gas to Moldova even like before the end of the transit agreement. These flows actually increased a few days before January 1st and have remained quite stable since then. Flows into Hungary have declined since January 1st. However, we think this is part of like a seasonal trend that takes place every year as yeah, like low temperatures they take over the region. So like these flows into Hungary from Romania tend to go lower. In terms of the gas flows from Hungary into Slovakia and Ukraine, we saw a decrease in the flows into Ukraine. Again, like this is very seasonal when we check like the trends in terms of like annual flows. Also, when we take a look at exports to Slovakia, this is what is quite surprising, because these flows had been flowing at maximum capacity in recent months. It's part of a pilot project that has seen this firm capacity at this interconnection point being increased like at the specific time periods, and now we're seeing this like lower exports to Slovakia that basically difficult the country's ability to import additional gas now that doesn't have the supply coming from Ukraine. Next slide. Very interestingly, also to highlight the fact that Poland have also seen flows from the Czech Republic and Ukraine come down to zero. And it was interesting because back in 2022, as I mentioned before, Poland refused to pay gas deliveries in in rubles. And since then, there was like a lot of like questions in the market whether as to whether Poland was still like importing this gas and how much would that be. Well, the trend suggests that Poland was uh, indirectly or directly benefiting still from this Russian gas flows via Ukraine, and we can see this how they come to a halt on January 1st, and yeah, specifically the flows that went from the Czech Republic and via Ukraine. Now, in terms of gas withdrawals, quite interesting because it's true that this winter has been colder than the previous two winters in Europe. However, there is a trend that we can observe since the determination of the transit is that countries like Austria, Poland, and Slovakia have seen their withdrawal rates increase in the last few days and or since January 1st. So basically, it's a way for market players to make for the loss of Russian gas supply via Ukraine. We're not observing the same for the Czech Republic, and this is likely linked to the fact that they're importing significant volumes from Germany that compensate for the loss of Russian gas via Ukraine. So this trend is likely to continue, and it's actually framed on like some of the market players' strategies in the region. For example, we know that SPP in Slovakia had announced that it would keep their gas storage levels at 100% until January 1st, and that from that moment onward, particular in preparation or anticipation to the halt of Russian gas supply, it would start using the gas storage facilities that they have. So this is now confirming that trend. Next slide, please. Now we'll be talking about more of the specifics of what we could be observing in 2025 in the region, in the next few months.
So here we're looking at the same map that we saw a few slides ago, but this time focusing on the new terminals that are being built in Europe in green, and the capacity expansions at existing terminals in red. So it's interesting to see here that we have about 24 BCM of confirmed additional capacity in the next 24 months, with expansions in the Netherlands and Croatia, and new terminals being built in Italy and Germany. And we actually already have some of this new capacity ready to come online before the end of winter, so before the end of March this year, with a 2.1 BCM expansion at Świnoujście in Poland and 2 new terminals in Germany, which will add a combined 9.2 BCM of capacity to the country. And again, like we mentioned before, some of these capacity holders at these terminals will be able to sell this additional gas to the CEE region. However, bottlenecks do exist, and not all of this extra gas will be able to be efficiently delivered to the CEE region. So we'll kind of delve on into that later on.
Yeah, and that's a great point, because that's precisely the point we want to highlight, that even though we have we've had these additions in terms of capacity for LNG, and we'll have more coming in the next few months, not all of that will make it into the market because of these bottlenecks that we observe and we have identified. For example, in the case of German flows into, say, the Czech Republic. So last year, Gascade, the German TSO, reduced firm technical capacity at the Brandov interconnection point by 80%, from approximately 52 to 10 BCM of firm capacity. And this was the argument was that since we don't have any more flows from Nord Stream, it would not make sense like to have like that much capacity there. However, if we observe a significant role of LNG imports coming through Germany into the CEE region, it's likely that the current capacity that is available there will not be enough to basically be like a good supplier for the whole CEE region. For example, we know that now we have 10 BCM of firm technical capacity, and we observed that the Czech Republic during a cold winter, for example, could have an annual demand that could go up to 9 BCM. So basically, if the Czech Republic doesn't have other ways to supply or to source gas, yeah, basically it will take most of this gas that will be like imported via Germany, leaving almost no room for the rest of the region, especially countries like Slovakia, to benefit from this interconnection point. Next slide. In terms of the Balkan Stream axis, yeah, what we see is that, again, we could have the potential to increase flows via Turk Stream because we haven't reached firm technical capacity yet. However, to be able to do that, like we'll need to be able, or the region will need to be able to sort out other bottlenecks that are situated like at different points of the chain, specifically between Bulgaria, Serbia, and Hungary. So so far, even though like we could say that the current utilization rate of the Turkish Stream could be around like 85%, that we've seen increasing flows like this year, well, last year in 2024, yeah, like seeing higher flows than that, like would depend on like other bottlenecks that we're going to describe in the next few slides. But like that said, like what we can highlight here is that the flows that come directly from the Turkish gas grid are not maximized. So we still have like probably half of the capacity there that that market players in the region could use. However, this will depend on like how much like Turkey will need that gas for domestic consumption. Another important aspect to highlight here is that the interconnection point between Greece and Bulgaria only has currently a capacity of like 3 BCM. This like interconnector Greece Bulgaria that is supposed to be increased in capacity to 5 BCM at the end of the year, but like that has not happened yet. Like we only have like 3 BCM there in that corridor. Next. As we mentioned before, flows into Hungary from Serbia. Let's remember that this gas is mostly coming from the Turk Stream, although like some flows could potentially be coming from other sources. But yeah, throughout most of the year, we have like this this corridor or this interconnection point between Serbia and Hungary being maxed out. In winter, as you can observe, like in the chart, like we can see like some capacity that is made available. However, this is because Serbia tends to use more gas like during this winter period. But like overall, there is no more room for additional gas like to go to Hungary in this route. Another point that we can highlight here in terms of Hungary is that we still have available capacity inflows that could come from Croatia and that are coming from Croatia. However, this capacity will not be enough if we take into account that we have the expansion of Croatia's Kirk terminal expected for Q3 2025. So like here we're talking about more than 6 BCM. In that sense, like current capacity, firm capacity in place will not be enough to increase these flows anytime soon. Also, in terms of like exports from Romania to Hungary, we see that they're also maxed out throughout like most of the year. During winter, again, like they tend to reduce because of like local domestic demand in Romania, and now that we have like more flows going to Moldova. But yeah, so like this part of this limitation that we have in terms of capacity are dependent on the development on the Brua pipeline that is not yet to be finished. Like market players expect this pipeline just to come online by 2027, which will coincide also with the commissioning of the Neptune field in Romania. Next slide, please. Again, when it comes to flows from Romania, what we see is that now we've been having increasing flows into Moldova, but like also this route is soon to reach its firm capacity, and this is worrying because Moldova, as we know, like will likely need more gas coming from Romania this year if we don't have like other sources of supply coming in this direction. Next. In terms of like gas going into Slovakia, we mentioned this before. Basically, exports from Hungary into Slovakia have maxed out, and yeah, this is part of this pilot project we talked about before. But yeah, it basically restricts the amount of volume that Slovakia can source coming from the south. From Croatia, it's quite interesting. As we can see, flows from Croatia into Slovenia are pretty much maxed out too. And they've been like for a long time. We also mentioned that flows into Hungary still have like some room to go. However, this will not be enough considering Kirk's expansion to 6.9 BCM later this year. So we have like some pipeline projects taking place there, like one that will increase flows to Slovenia to 3.5 BCM per year, and the other one through Hungary to increase that capacity to around 6 BCM per year. But like this project overall, it's expected to be ready by 2027. So yeah, this is not something that the region will be benefiting fully in 2025. So like it's likely that this will impact the LNG imports that will come into Croatia in the next few months. Next slide. And here, basically, we wanted to present like a summary of the takeaway. We know that like looking at all these charts can be like a bit overwhelming, but basically we can all find what this means in terms of supply diversification for the region. And let's start with Poland. So Poland on the paper would be a country that is extremely well supplied through the Baltic pipe, domestic production, LNG capacity that is going to be expanded like in the next few months. However, the fact that the gas demand is quite significant and has been increasing year on year since last year, basically leaves like very little room for Poland to become a net exporter into the CEE region. This is also linked to the fact that we have not seen flows between Poland and Slovakia in recent months. So this could be basically limiting again the capacity of Slovakia to take like additional flows since then. However, we know that SPP is expected to get gas flows from Lithuania. These flows will be imported through the Klaipėda terminal going forward. Now let's move to Croatia. Croatia, as we just saw, like has like little demand compared to like other countries, like 2.4 BCM, and it will have this expansion to 6 BCM per year of LNG capacity. So little domestic production, but then like the potential that the country has like is quite significant in terms of like exporting these volumes into the wider CE region. However, as we just mentioned before, the fact that we find these bottlenecks that will not be solved this year will basically limit the country's potential to be a significant gas supplier into the region. When it comes to Greece, also very good example. The country has like almost 13 BCM of LNG capacity since the addition of the Alexandroupolis terminal last year. It has it's a very well supplied country. It can like get gas via the TAP pipeline and has access to Turk Stream flows, which have been using extensively like this year. So that said, like yeah, the country, even though like it has like all this supply and a demand that is like low compared to all this amount of supply, the fact that the interconnection that connects the country with Bulgaria is limited to 3 BCM at the moment really limits the potential that the country has to send gas upwards into the region. These works will increase capacity potentially at the end of this year to 5 BCM, but still it will not be enough to basically increase significantly flows into the wider region, especially because this interconnection also flows Azeri gas. So there will be kind of like competition between these flow streams. When it comes to Italy, a very interesting case too. Italy, it's a well-supplied country too. New capacity is coming online too. So like there is around 5.4 BCM of firm technical capacity that has been booked this year at the Tarvisio interconnection point with Austria. So we're expecting these flows to actually be used this year. So like, of course, it depends on like that all other supplies like via pipeline, but like Italy should be like an important player to watch for like this 2025. And just to finalize like this summary, we have like yeah, capacity that has been booked at the Oberkappel interconnection point between Austria and Germany that would allow for LNG coming, for example, into a Netherlands Gate terminal this year, and also capacity at the Brandov interconnection point that would allow for imports of German, like into Germany, imports of LNG into Germany to go into the Czech Republic. That's a summary of this part. Then next slide, please. And the big question is like, what comes next? Yeah, so of course, what we are expecting is that geopolitics will have a major impact on the overall EU gas supply, especially when it comes to LNG, but potentially into pipeline. We have all followed the news of like this fears in the market about like, yeah, a potential attack on the Turk Stream pipeline in recent days, and that has also like contributed to I guess like the increase in TTF prices this week. But yeah, overall, what we can expect is that we have like the uncertainty around the negotiations to end the Russian-Ukraine war, especially with the incoming U.S. administration. We will be following closely what's going to happen in that regard. But let's just keep in mind that basically for U.S. LNG, the best scenario is basically not to have flows via Ukraine in practical terms, in terms of like how relevant US LNG could be for Europe. Of course, we have like the risk of additional delays affecting new LNG supply coming online. This could basically tighten overall markets, global markets. Sanctions on Russian LNG, as we saw also in recent days, that could, yeah, even tighten the available demand supply that could be available for Europe. Also higher cross-border tariffs, and yeah, we've seen this more often than not recently, especially because the loss of a Russian pipeline gas supply via Ukraine has made some TSO actually lose these revenues from transit. So like to make for that loss, they are increasing tariffs for this year that could make actually their own hub prices to tend higher in terms of like prices this year. And finally, yeah, the risk of congestion at key interconnection points, as we have seen, for example, the Brandov interconnection between the Czech Republic and Germany. That's something to watch out for, yeah, this year.
Thank you very much, Ron, for all of this. So we do have a little bit of time now for a few questions, and we have had a few that have come through. So one regarding the perspectives of natural gas and LNG into Ukraine. This one I can take it. So we have seen that Ukraine has actually been using its own gas for a while to meet its current domestic consumption needs. But if consumption were to increase, then kind of LNG will have to be an option. And we know that for now, Ukraine, they have two potential routes to buy some LNG. So a northern one via Lithuania or a southern route via Greece. And we actually did see in late December one spot cargo that was bought into Revitusa in Greece that was bought by the trading arm of DTEC. And we do know as well that going forwards, DTEC has signed a head of agreements with Venture Global for some US LNG via CP2 and the Plaquemines terminal. However, kind of the bottlenecks that we mentioned earlier in the webinar will impede or can impede Ukrainian efforts to import more LNG. And as well, if we consider the fact that Romania has very high transit tariffs, that could impede as well the gas that comes through kind of through the southern corridor via Greece. We have another one as well, asking if it would be possible for European market players to continue storing gas in Ukraine going forwards. Ron, if you could take that.
Okay, let me take that. Sure. Yeah, technically, actually, it's possible for European market players to continue to use this infrastructure in Ukraine. However, there are like a few things to mention in that regard. First of all, is that I would say the main driver to take a look at is the seasonal price spread. We are not seeing basically this curve being the correct to incentivize market players to store gas like there in summer. If anything, we're actually seeing like summer prices at the moment being like higher than prices in winter. So like this could basically produce that we are not going to see like much flows going into Ukrainian gas storage facilities this summer. Another factor to take into account is that, for example, some of the flows that we tend to observe, they happen during summer, and they tend to happen when, for example, a country like Slovakia starts like sending volumes into Ukraine when its own gas facilities are filled, right? So it is likely that we're not going to see that happening this year. As I said, like because Slovakia is actually pulling a lot from gas storage facilities at the moment. So like, I doubt that we're gonna see the country's facilities being full during summer. So if anything, I think like any supply that will come into Slovakia will be used to fill the storage facilities. Another factor that will be impacting this is that Ukraine from April this year will be increasing tariffs on cross borders and short hauls. So this will also like make this I guess like this storing of gas like in Ukraine like less viable for some market players. So like overall, yes, technically that's something that could continue happening, but like in practical terms and economic terms, it seems that we don't have the right incentives there to do it.
Thanks, Ron. We have another one that came in as well. If we expect any further demand destruction at current TTF prices.
Yeah, that's quite interesting too. That's something we've been following closely. When it comes to industrial demand, we have observed, say, like since April this year, we started to see year-on-year increase of industrial gas demand in several countries, especially say like in countries like Hungary, Germany, etc. However, we can see clearly on the data that, for example, since October and November, like basically the year-on-year increase has been eroding, and now it looks like if we don't have like any like actual growth, we are year on year happening. So this is very likely the result of this high TTF prices, yeah, having like this negative impact on gas demand. Yeah, that's something that we have to follow like going forward, like because on the other side we also have like the gradual ease of macroeconomic conditions with yeah, like the gradual decrease in interest rates like in Europe. So we'll see how that will evolve, but yeah, definitely we have seen that demand destruction taking place.
Nice one. We have another one that came on. The expected impacts of the most recent US sanctions over Russian LNG and how feasible would an EU-wide ban on Russian LNG be? This one I can take. So, yeah, the most recent sanctions from the US was focusing on two small terminals, the Vysotsk and Portovaya terminals in the Baltics. The Vysotsk terminal really is very, very small. It's not even 1 million tons a year of volumes, and it's only going to the Baltics. Portovaya last year exported about 1.5 million tons. A third of that approximately went to Spain. But kind of overall, these are quite small terminals compared to Yamal, which is now the only non-sanctioned Russian LNG terminal that brings LNG to Europe. So potentially, once the NSR opens later in the year, Europe could pull a few cargoes away from Asia towards the EU. However, we do have a significant amount of additional supply that's coming online earlier this year, especially in the US. So we have kind of the Plaquemines terminal, which should be the first phase should be fully online by the summer. The Corpus Christi expansion, which should come online in February, as well as LNG Canada in April and the GTA FLNG in West Africa in April as well. So that's kind of going to add a lot of supply, and a lot of that is going to go into the EU. And those terminals have already been delayed, and we have noticed for some of them, especially the Plaquemines one, good progress is being made. So all in all, relatively minor impacts of these sanctions, just due to kind of the size of the terminals impacted and the fact that all of the supply is coming online in H1 this year. Some of the sanctions as well targeted a few vessels, 3 or 4 of them. One or two of them, they mainly serve Asia and Turkey, so it shouldn't impact Europe too much. 1 or 2 do make the occasional trip to Belgium and Greece, so we'd have to kind of watch out for those. And in terms of feasibility, an EU-wide ban on Russian LNG, it could potentially be feasible, but I would say not in the short term, like it would once all of this additional supply from the US and the Atlantic Basin in general just comes online. Once that's online and kind of secured, then it would be a bit more feasible.
Yeah, definitely. I think like on that, like ban on Russian LNG, definitely it's hard to say that coming like just right away. Yeah, especially because you need to have like this majority at the European Council. Politically speaking, the European Union is going through like some, I guess, like hard times. So like putting all these like people in agreement given the current ETF prices that we have, like seem unlikely at the moment. But like, yeah, this is something that we're following like very closely. I have another question on like, given the current transmission capacity tariffs across vertical corridors, is it possible to provide an alternative competitive option for supplies to Ukraine in 2025? I think that Charles mentioned like some of that, like another alternative would be like via Lithuania, Poland. Uh, but I think like still the vertical corridor seems to be still like the best option to go for, even if we are seeing still like very high tariffs, especially in Romania. As long as these high tariffs in Romania remain, yeah, of course, like this will be affecting, like like how I guess like economically feasible is like for the country to import LNG. But like as Charles mentioned, the country so far has been like in a good position to cover its own domestic consumption, which is something that is still very uncertain because it really depends on like what happens with the war, right? Like the country has had actually relatively low consumption because of the war. But like if we have a scenario that, for example, like in which the war is over and Ukraine starts sort of like increasing domestic gas demand, then yeah, I think like it would make more sense to have like more discussions in terms of how Ukraine could import additional LNG. Yeah, I think that that's probably yeah, that's probably most of the questions we have. Oh yeah, I just saw one like, when the Ukraine-Russia war is over, would the gas flows from Russia resume? I think this is very unlikely to see basically flows going back to what they were like in 2021. I would say even like from the contractual point of view, we've had like a lot of court rulings that have involved, say, like players in Austria and Germany, and not only in the European Union, but like even on the Russian side in courts in St. Petersburg, that basically, would make like very unlikely to see like this contracts sort of like going back to functioning like at 100%. So no, I would say like this is not going to be the case, but like yeah, that's something to follow, of course. Yeah, I think like we're arriving to the end of this webinar. We really hope you found it like insightful. Thanks for the questions. And happy to see that it was like interesting to all of you. And yeah, don't hesitate to reach out if you have like additional questions on the topic. We'll be following this subject closely in the next few weeks. Thank you, everyone. Thanks, Charles.